Good morning, good afternoon, and good evening. Whatever time you're listening to this, please welcome to the Market Color podcast. This is a weekly podcast that is dedicated to providing our listeners with a broad overview of the global financial markets, including a special focus on the Kenyan markets. And now to this week's podcast, where we are reviewing the performance of the global markets during the 52nd and last week of 2023, and that is from Monday the 25th to Friday the 29th of December. And without further ado, this is your host Jamuhuri, and together, let's dive right in. During the past week, trading in the global financial markets was on the down low due to the Christmas holidays. However, in the US stock market, the S&P 500 closed out 2023 with a surprising gain of 24% as the economy remained strong and inflation began to slow down as the Federal Reserve signaled an end to its rate hiking campaign. The broad market index rose for 9 straight consecutive weeks towards the end of the year as big tech stocks lifted the Nasdaq Composite to its best year since 2020, and this was on the back of enthusiasm around artificial intelligence. The S&P 500 registered an impressive gain of 24% in 2023, which was just shy of its record all-time high of 4,796 as the index settled at 4,769. The Dow Jones Industrial Average finished the year in positive territory as it rose 13.7% and in the process broke above the 37,000 level and eventually closed the year at 37,689. Amongst the 3 major indices, the Nasdaq Composite recorded the best performance in 2023 as it registered its best year since 2020 with a jaw-dropping increase of 43.4% to bring the year to a close with a reading of 15,011. And in the U.S. Treasury bond market, on Friday, investors' attention was focused on the path ahead for the economy and monetary policy as traders wrapped up what was a significant year for bonds. For the last trading day of the year, the yield on the benchmark 10-year Treasury rose less than 2 basis points to 3.866%, whilst the 2-year Treasury yield ticked down about 3 basis points to 4.25%. 2023 was a momentous year for the Treasury yield curve as the Federal Reserve finally brought its aggressive rate hiking campaign to an end, and investors continued to worry about inflation and the potential for an economic recession. The yield on the 10-year bond broke above 5% in October before dropping down to below 3.9% in recent weeks, and this was on account of the Federal Reserve holding back on further rate hikes, plus the announcement that it would begin cutting rates in 2024. At its last policy meeting in 2023, the Fed indicated that it expects to cut rates at least 3 times in 2024, but investors are hoping for further rate cuts, and markets are broadly pricing in that the first rate cut will take place in March 2024. Whilst the US economy remains relatively strong, there are concerns about whether the Federal Reserve will be able to achieve a softer landing by gradually cutting interest rates in line with declining inflation, and in the process stimulate economic activity and avoid a recession due to the current elevated interest rates. For your information, bond yields and prices move in opposite directions, and 1 basis point equals 0.01%. In the commodity markets, crude oil prices closed out the year more than 10% lower, and this was on the back of bearish sentiment that the market was oversupplied due to record production output from non-OPEC members. Whilst OPEC and its allies have undertaken to cut production by 2.2 million barrels per day in the first quarter of 2024, production outside OPEC has continued to increase, with the United States producing an estimated 13.3 million barrels per day just last week. On the other hand, fears of escalation in the Middle East have triggered brief spikes in crude oil prices as militant attacks on shipping vessels in the Red Sea continues to disrupt global supplies. Despite the ongoing geopolitical tensions arising due to the devastating war in Gaza, both global benchmarks recorded their first annual decline since 2020. The international benchmark, Brent crude, was down about 10.32% for the year and closed for trade at $77.04 per barrel. The U.S. benchmark, West Texas Intermediate crude, declined by 10.73% for the year and settled at $71.65 per barrel. Meanwhile, Murban oil, which Kenya imports, declined to $79.55 per barrel, and this was down from $80 the previous week. In the precious metals market, the price of gold was comfortably trading above $2,000 an ounce and recorded its best year since 2020, supported by the Federal Reserve's announcement that it will begin cutting rates in 2024. Investors are projecting record high prices for gold next year as lower interest rates lead to a weaker US dollar and therefore higher gold prices, given the inverse relationship between the two assets. Lower interest rates tend to weigh down on the US dollar and at the same time reduces the opportunity cost of holding the non-yielding asset that is gold. The price of spot gold was up by 13.45% for the year, for its first positive year in the past 3, and eventually came to a close at $2,062 per ounce. And on that note, we come to the end of this week's podcast. Thank you for listening to the Market Color Podcast. And for your information, the Market Color Podcast is now available on all the major hosting directories. That is Apple Podcasts, Spotify, Google Podcasts, as well as Amazon Music. Once again, thank you for your continued support, and I look forward to interacting with you again next week.